What's up, everybody? It's the Bit Hitter. Welcome to this week's Global Capital Market for the week ending August 13th, 2010. Sorry for not being around, I guess, as far as getting these videos out in the past few months. I think it's been a few months since we've been able to do this, but I've been very busy with other projects and things and managing my own book and books for other people and stuff like that, so I haven't had time to do anything at all. But nevertheless, here for you to go through some of the stuff that I'm taking a look at and share my thoughts as far as what's happening with supply and demand and how it's affecting the current market across the S&P. We'll take a look at crude oil and also the euro-dollar currency. In addition to that, I'll try to get those daily, the overnight market sentiment emails coming back out. Haven't had a chance to do those either. Actually, have not had time to even look at any of that stuff recently, so it's probably not that big of a deal since we remain in a very, very large range trade for right now, but I'll get that stuff out to you guys anyway so we can get back in the swing of things, because a lot of you found that to be very valuable as far as helping you establish a bias for the beginning of the day. Also got to get those market updates back on Twitter as far as what the cash and pit sentiment's doing too, so got a lot of work cut out for us going forward, but that's okay. So we'll get everything going again for fall, and we'll be doing great. Anyway, the S&P today closed at actually 1075.75. The data that you're taking a look at right in front of you right now is not accurate. It's saying it closed at 76.10, which it can't. It's the E-mini, only runs in quarters. So that's beside the point. What is important to take a look at as far as what's taking place right now, if we go back in time and take a look at what was going on with supply and demand, we saw a very limited amount of supply come through when we made this bottom. Demand was coming in these big green bars right here. The green doesn't mean it's demand necessarily, it just means it's very high volume. When high volume is high, way much higher relative to the other volume that's trading around it, that means that the institutional paper's coming back in and generally taking the opposite side of the trade. So since we already discounted, we saw the institutions come back in, we saw a lack of supply, and then we started to get our bounce and started to move up. At the top of this area, here's when the institutional side was starting to sell because we were already marked up and we had higher than normal volume. So we came back down, had the exact same thing where we had a lack of lack of supply at this point, and we started to see demand come back into the market and prices bid back up. This happened in a fairly quick manner. Typically we'll trend a little bit higher than this, but we rallied, sold off, rallied real quick, sold off, and then rallied. This day, things up here got interesting. There was a big shift in sentiment on the Fed day. This day right here, which was 8-6, this is a lot of demand coming back through. And the reason why you know that it is because price sold off, but immediately was bid back up and it was put back in the range on very high volume. What that means is that there definitely are institutions coming back in on the buy side, bidding price back up. Because if this was all sell side, we wouldn't have price bid back up and be selling off. However, on the Fed day, we saw, or let's see, what day was this? This was the 9th. There was a substantial amount of lack of demand coming through to get us out of this range. This is basically that's your sell signal right there, that there's not enough demand to get us out of here. Price can't go any higher, and then it started to decline. And it declined on relatively, almost double the volume the very next day on August 10th. And that's when price started to drop. This was very heavy sell-side activity coming through, and we know that because of the elevated volume and price close on its lows. So this is only taking place when people are liquidating these positions and they're selling off, and specifically the institutional side. What we have seen since then is we have seen a high-volume day on Thursday, which came back with a little bit of a bid, which pushed price up, but this is still a down day. So that means that while there is some demand coming back through, it's not enough to get us back up again. And that was confirmed with Friday's activity. Friday's activity was another down day, but it's important to note that it was a down day on very, very light volume. It's also important to note, too, that we're already discounted from where we've come from. So there is definitely a possibility that over the next Monday, Tuesday, Wednesday, we certainly could get a bid coming back in at this area. But you have to be very careful, and the reason why you have to be very careful is because we've had 4 down days in a row, and we have not had what we'd be looking for is something similar to this type of bar, where we make a new low and then price immediately reverts back up. And that would be a clear sign the institutions are really back on the buy side, back on bid, getting back in the market and getting back long. That hasn't quite happened yet, but there is evidence that there is a small amount of demand coming back through. So as far as the time frame, as far as when we will start to see a bid come back in, we won't know for certain. It'll either be Monday or it'll be within the next couple of days. So you can't get in right away and start buying and bidding this back up on, getting back in long. You have to wait for the price action to confirm that the institutional side is coming back through, and you will see that through elevated prices. You'll see that through volume size coming back through on bid, which is going to happen since we're close to it happening anyway. It's just a matter of when is that going to happen. You'll have to watch intraday. You'll have to take a look at the cash and pit sentiment. When the cash is bullish and the pit's bullish as well, that's when you're going to find that day, and you will have an upside trend day. So you're going to see this. Two things are going to happen. One of which is going to sell off and make new lows, and then it's going to bounce and finish up on the day like we saw over here, or it'll simply just trend all the way back up. Those are the only two possibilities that we'll see. But the question is, when will we see that? It's a possibility that it's Monday, but that may be a little bit too soon just because the volume coming through right now, you would like to see that a little bit higher. But it is important to note that we never broke yesterday's low, Thursday's low, and so the supply that's coming through it's limited at this point. And the reason why it's limited is because if it was a lot, we'd already be making new lows, and we're not. So that's kind of convoluted, but hopefully you're able to follow what I just said as far as there are buyers coming back through. Supply, as of Friday, is running out, and the reason why it's running out is because we were not able to get out of Thursday's range. Thursday, if you take a look at that, we are starting to get a bid come back in, otherwise it would have finished on its lows like it did on Wednesday. Wednesday was a bad day. Not necessarily a bad day, but a lot of institutional selling. So there is evidence that there is a lack of supply coming through and some demand, but the question is there enough demand to make us bounce? As of right now, there is not, but the potential for that demand to come back through is there. So you just have to watch intraday to confirm when that demand is coming back through. If we take a look at the S&P on the weekly time frame, here's what we look like. That top that we talked about was also confirmed on a very, very light volume top in the weekly time frame as well. So price is already marked up. Volume was very light, couldn't break out of this range, which tells you that you're reaching a top, and basically the demand's completely running out, and once demand runs out, it replaces supply. So that's what we saw this week. So we saw quite a bit of supply come through relative to where we were last week, and the weekly bar basically closed almost on its lows, which shows that there is quite a bit of selling for the week, which there was, which is why we're down on the week. So it's important to keep that in mind as well, as on the weekly time frame, the institutional side is bearish, and they are starting to sell. So that, in context with the daily, as far as some buyers coming back through, should help you to paint a better picture as far as what's taking place right now. I don't have fibs on there. We're in a range, so everything we've talked about since back over here in the flash crash in April, I guess, maybe that was the last time we did a video, but not much has really changed since then as far as fibs and things. If we take a look at, here's the actual index in the 8ths, quarters, thirds, 1/2. We remain between, this is your 50% retrace, since July. So this is taking a look at the beginning of the July leg. Let's see. June. Yeah. We're going back over here. Where are we going from? We're going back from March. And this is March of, oh darn, I don't have this set up the way that I want it to be set up. But you'll still get the idea. Let me try to fix this real quick for you. Oh no, we're alright. Our bottom right here goes back from July last summer. So yeah, we're fine. There's no problem here. Basically what you're taking a look at is where we are relative to the last leg up that started last year in July. And we've made almost a 50% retrace from there. So we are still, this is still very bullish as far as where we are relative to where we've come from, which is the 1219, 1220 area. So there is certainly still the real potential that price continues on higher. We are not discounted enough whatsoever in order for us to say we're going to get totally bearish. You can certainly be bearish, based on the weekly time frame or whatever the case may be, or even going back to when we actually made the high from this from the March 9th lows, which was You know, it was this area back here. It was a 12, 20 area that we hit.